The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Very warm welcome to Squawk Box Europe with Karen Cho, Juliana Tattelbaum, and I'm back as well, Steve Sedgwick. And these are your headlines. A tech sell-off shaking global markets as investors fears grow over AI stock valuations.
Stateside, it's a clean sweep for the Democrats as Zohran Mamdani claims victory in the race for mayor of New York, while the party is projected to win key races in Virginia and New Jersey. In his victory speech, Mamdani had this message for President Trump.
So Donald Trump, since I know you're watching, I have 4 words for you. Turn the volume up.
Novo Nordisk cuts the top end of its guidance on falling expectations for growth in its flagship weight loss drugs. We'll hear from the CEO later this morning.
Very good morning. Morning, Karen.
Good morning. Welcome
back. Good morning, Juliana.
Nice to have you back.
Is it? Because you didn't want to talk to me before the show. I saw you two trying to prepare for the show rather than just chat. I wanted to chat. There's so much to talk about. And you know, like there's this thing about a certain type of man feels they have to look a certain kind of way and be a certain kind of machismo in life, you know. And I don't really feel that kind of machismo. I'm kind of more in touch with all kinds of other parts of myself, which I feel I don't need to be like that. And I feel like this market, there's something machismo about people who say tech only has to go up in certain directions, or anyone who insults my company by saying it's overvalued. It's a machismo. It's like we can only be successful if we're trading at X times forward as well. And that kind of seems to be the narrative overnight between Palantir and Berry and what have you. But actually, I don't look at it like that. I see brilliant technology, amazing companies, but they're the wrong price. So I don't feel the machismo needed to say my share price would have to go up ad infinitum in order to prove that I'm a great company. It seems some of the CEOs out there pushing back at the people who are saying the valuations are crazy, just exhibiting some form of machismo.
I was wondering overnight whether we have a Palantir problem and maybe 1 or 2 other stocks that could be a problem, or do we have an AI problem that has emerged? And the reality is, we've seen for weeks and weeks and weeks, investors have been incredibly uncomfortable about the escalation we've seen in some of the AI trades. Michael Burry, was he preying on that? Going in there with the short, the market was looking for an excuse to sell.
Well, this is a man. What his short is, to be fair.
But this is a man with.
There's no filing on his short.
No, exactly. But a man that was very vocal about having a short when it comes to some of these stocks. And Palantir is one where you've seen the highest valuation at this point. So was he almost preying on some of those fears? And as a result, you get a sell-off to the downside with momentum.
Do you know what? That is exactly the point. I have nothing else to say, apart from I will say for another 3 hours. But look, what is Palantir? It's a brilliant AI company that sells the software, which means that all kinds of companies can spot fraud, they can disseminate data, it helps all kinds of governments, it can do lots of interesting things which are below the radar as well.
Remove immigrants, for instance, in the United States.
Well, and which makes it controversial as well.
Exactly.
So it's a $452 billion company, yeah, with a PE. What's the PE? Crazy PE. Pick a number. I mean, hundreds of times. Way more than Nvidia, way more than Google, way more than all the tech companies, right? This company has just upped its revenue guidance, yeah, to what, 4.4 or something like that billion dollars? So it's a near 20-year-old company. It's got a $4.4 billion revenue, and it had great growth in revenues. No one's denying, no one's saying, before you get annoyed with us as well, we're not saying you're not a great company. We're just saying you've got $4.4 billion of revenue forecast, and you're trading at $452 billion valuation. No one else think that's slightly crazy out there?
I think a lot of people think that it's crazy, but valuation is not usually a catalyst for major share price moves. It's a factor, and it's a reason that you wouldn't want to own something, but usually there needs to be a catalyst. And I think what's interesting here is that investors are sort of searching for what the catalyst was that drove the sell-off. And you can say that it was Palantir, that expectations were simply so high. But I think it's also important to pay attention to the speculative trade we've seen really building in the U.S. And I think that is potentially a big factor here. The fact that we've seen a major uptick in trading in penny stocks, unprofitable stocks, and stocks with really high EV to sales multiples. And this has been something that's flagged as a concern from institutional investors for weeks and months now, and maybe this is just coming to a fore.
Can I just remind the audience about the Amazon story last earnings season? Amazon was the stock that was disappointing. Investors had question marks around it and its AI story. And what did we get this earnings season? The revenues came through, the AI story was strong. In fact, it got a fresh deal with OpenAI, and the stock has taken off. So be very cautious about what you're willing to dump in a moment of a huge sell-off. And Palantir, maybe it's the wrong price. Fair enough. But I think the questions that were raised overnight, is the AI story, are the wheels coming off it just yet? And the reality is what we just saw in earnings season is that we're embarking upon a huge investment cycle. Pricing is key. Don't overpay in this market, but also don't dump a stock if you think it's got long-term potential.
Amazon net income was like, year on year, was like $21 billion. Palantir net income is 476 million, not billion, million. So, you know, when the Amazon story, which is also backed up by a lower valuation than Walmart, for instance, just saying, you know, and does churn out net income of $21 billion. That buys you a little bit of cred on the street as well. Lots of things.
Let's take a look at U.S. markets. And when you put it all together, the trade that we saw yesterday, ultimately the selling that we saw throughout the day accelerated into the close, and we actually closed on the lows of the session. So the Nasdaq lost about 2%, the S&P 500 more than 1%, and the Dow held up best but still lost about 250 points. Palantir certainly getting a lot of attention yesterday. Let's take a look at some of the key U.S. tech stocks. Palantir shares dropped about 8% in yesterday's trade. NVIDIA also took a hit, off about 4%. AMD also contributed to some of the jitters. Post-market yesterday, AMD delivered results and seemed to make things a little bit worse as well. Tesla also pulled back sharply in yesterday's trade. Now, all of this came as chief executives of Goldman Sachs and Morgan Stanley weighed in on the chances of a market correction following a strong rally this year.
It is likely there'll be, a 10 to 20% drawdown in equity markets sometime in the next 12 to 24 months. And I'd say there are very few people in this room that don't think that that's a meaningful possibility. It doesn't mean that the general direction of capital flows, investment, portfolio allocations changing. It just means things run and then they pull back so people can reassess.
We should also welcome the possibility that there would be drawdowns, 10 to 15% drawdowns that are not driven by some sort of macro cliff effect, just the reality that, for example, metals have really run. I think that's a healthy development, and what we'll be looking to see in 26 is whether the market, in fact, broadens and we see that kind of dispersion.
Now, here's what we've been talking about so far this morning. Palantir CEO Alex Karp hit out at short sellers in an appearance on CNBC, now including famed big short investor Michael Burry, after he revealed bets against NVIDIA and Palantir in a regulatory filing.
What is going on here is market manipulation. We delivered the best results anyone's ever seen. It's not even clear he's not doing this to get out of his position. I mean, these people, they claim to be ethical, but they're actually shorting one of the great businesses of the world. And I'm not against shorting as a matter of theory, but I'm just saying pick something that is not doing a noble task, and it's us against them.
Now, we've seen some pretty extraordinary moves in the Asian session as the jitters around the AI trade filtered over to that part of the world. Right now, the Nikkei 225 off about 2.5%, but at one stage overnight, the Japanese index was down almost 7% from a record high. We've also seen sharp selling in South Korea. You can see on your screens that the Kospi is down almost 3%. When you look a little bit more closely at which stocks were moving in Asia, which stocks have been on the move, you've got SoftBank down about 10%, obviously heavily exposed to the tech trade, making a huge bet on AI. Samsung also down sharply, about 4% there. Now, in terms of European futures, here's the early look. Yesterday, the Stoxx 600 slipped about 0.3%, so paling in comparison to the losses seen on Wall Street. Right now, we are looking at a pullback as well, but again, muted compared to what's happening stateside.
How is that market manipulation? Sorry, infuriating. I've got to respond. How is that market manipulation if someone has a regulatory filing, they've got a short position on, they're being very public about it? Sorry, does that mean every single commentator who comes on CNBC, who's long a stock, who says it's the best thing since sliced bread, is also manipulating the market to the upside?
I think it's an interesting point around positioning. If you are very cautious around the AI story and it keeps getting away from you, that if you wanted to come back so you can get out of one of those positions, I think that is fascinating conversation point that he raised, whether it is market manipulation, that question.
It's not market manipulation. It's not. It's illegally filing a short. Trust me, you know, your husband does this business. He does long short. I know. I've tried to short positions in my life, in my former career. It is bloody tough. Excuse my language. And it is even tougher these days when you've got the Reddit crowd and the Robin Hood crowd who spot where the shorts are from the regulatory filings and then squeeze them. In the hedge fund world as well. It has never been tougher to short a stock as well.
I think the retail investor has totally changed the game around shorting.
And you're saying this to the world. How is that market manipulation? How is that market manipulation? Steve.Sedgwick@cnbc.com, Mr. Karp, or anyone else who wants to get involved, you tell me how that's market manipulation. And if I'm wrong, I'll read out your email. Probably won't be though. Democrat Zohran Mamdani has won New York's mayoral race, NBC News projects, and is set to become the city's youngest and first Muslim mayor, amid the largest voter turnout, I think, since 1969. Anyway, the 34-year-old defeated the former New York governor, who also was a former Democrat, of course, Andrew Cuomo, who ran as independent. But Cuomo had backing from President Trump. Also beat the Republican Curtis Silver, who I think at the moment looks like he's going to get about 7%. Who faced widespread calls to drop out of the race to support Cuomo. Now, Democrats also saw very interesting success in states of New Jersey and Virginia overnight. NBC News projects that Democrat Mikey Sherrill, that she will be the next governor of New Jersey, whilst the former Congresswoman Abigail Spanberger is projected to win as governor of Virginia, making her the first female in the state to hold the position. Speaking at the respective election celebrations, however, the Democrat winners struck a sobering tone about the state of the nation and the difficult path ahead.
Here in New Jersey, we know that this nation has not ever been, nor will it ever be, ruled by kings. We take oaths to a constitution, not a king. We've chosen liberty, the very foundation of democracy, and we've chosen prosperity necessary to create opportunity for all. So, New Jersey, to quote the boss, the future is now.
The chaos coming out of Washington is killing Virginia jobs and creating economic uncertainty for tens of thousands of families. Government employees, government contractors, small business owners who are impacted by the chaos coming out of Washington. Virginia's economy doesn't work when Washington treats our Virginia workers as expendable. I call on Congress, Republicans and Democrats, and our president to make real progress on bringing this shutdown to an end.
Tonight, you have delivered a mandate for change, a mandate for a new kind of politics, a mandate for a city we can afford.
US President Donald Trump is yet to react to the specific election results, but posting on Truth Social a muted quote, "And so it begins." The president's posts are focused rather on calling for voter reform bills and terminating the filibuster, which allows the minority party to delay or block legislation through extending debate. Mr. Trump sees the oft-employed filibuster tactic as a primary reason behind the lack of resolution on the government shutdown, which makes history today as the longest ever. Trump's call for voter reforms follows the decision by Californian voters, this was interesting, to redraw the state's election maps. Championed by Governor Gavin Newsom, the redistricting could add up to 5 House seats for Democrats in the midterms. Here's what he had to say in response to the successful campaign.
What a night for the Democratic Party. A party that is in its ascendancy. A party that's on its toes, no longer on its heels. From coast to coast, sea to shining sea. But it was not just a victory tonight for the Democratic Party, it was a victory for the United States of America, for the people of this country and the principles that our founding fathers lived and died for. And so we're proud.
Let's get some insight on both politics and markets with Nomi Prinz, who's founder of Prinsight Global. Nomi, so many things to discover. I have done my own research. I was in the 5 boroughs over the weekend, all of them, genuinely. My social media feeds, when I started just going into various different things, basically talked about the expense for New Yorkers of living in Manhattan and elsewhere more than anything else. Was this just about the same reason why Biden/Harris lost the last election because Americans were feeling the pinch.
That's exactly right. And we're going to see it again in the midterms. But right now, with this election, what we've seen is New Yorkers, California voters, Virginia and New Jersey are basically saying we are tight. We are strangled by our financial situation. We don't think the economy is working for us. And we're going to vote against whoever represented the old regime of the economy. And the byproduct of that is what we've seen in all of these elections. And Mamdani is one of the byproducts of that in New York City. People are strangled. They're going to vote for whoever isn't someone who brought them what they have already been dealing with.
To what extent do you think we can extrapolate these results to what may happen at the national level? That feels like the ultimate question here.
Yeah, exactly. I mean, the numbers are staggering. This is, again, it's a rebuke of what's going on with the economy. Therefore, Trump and the Republicans in the presidency and in the Senate and Republican majority in the House. And it's basically saying, look, this is really a precursor of things to come. The redistricting vote, the Prop 50 vote for yes in California, if that redistricts as it's supposed to, you're going to get effectively a tie in the House in terms of votes going over, and it's only a couple votes after that to get to a majority. And then the same thing in the Senate. We could see, majorities kind of being swapped in the midterms. But we're definitely seeing economic tightening around, the throats of the American public, forcing them to vote for whoever wasn't in office.
The fascinating part is that it's not being blamed on tariffs. This has been a genuine change in policy, but a lot of the merchandisers are trying to absorb those costs themselves, not pass on to consumers. So it still feels like it's the lurking issues, to Steve's point, around what Biden was facing, the high frequency items that have gone up, the fact that wages had escalated in recent years. So if you go out to a restaurant, it's very expensive because of those wages. It's other lurking issues, not the tariffs that have been blamed here.
No, it's really interesting. It's almost like the tariffs are sort of the complex next thing as to why we're feeling strained with the economy. But certainly it's the case that inflation has remained high, or at least higher than historic periods relative to the past elections, relative to the just recent presidential election. And certainly tariff uncertainty and government shutdown uncertainty all come to bear on how someone comes to vote in terms of why the economy is feeling bad, but also not necessarily looking beneath the surface. Definitely tariffs are a problem. Some of these costs will be passed on and actually have been passed on to consumers because grocery costs have gone up, materials costs have gone up, and producers don't necessarily know how they can feed into their strategies related to current tariffs because there's still uncertainty there.
Naomi, we've got to move on to markets, but final one from me on Mamdani. Is he more of a problem for wider Democrat re-election than he is? A lot of the Republicans are rubbing their hands because they call them all socialists anyway, or they call the senior Democrat Party leaders socialists or communists anyway. Mamdani just fits the bill beautifully as well. Is he a problem for the purple voter?
I think what he'll actually do in office versus what he promised will, as it always is, be different. Yeah. So even though he has promised things in terms of where he can help the New York, he's not necessarily going to be able to get everything through quickly enough before the midterm. So I don't necessarily think it's going to be a problem. It's just going to be one other data point where a major city has swung into wanting some more form of a solution to their economic strains.
Let me bridge to what's going on in markets because we saw this mammoth sell-off yesterday, and the unhedged newsletter from the FT this morning highlighted that it was somewhat amusing that we saw this major sell-off on Wall Street the same day that a socialist leader is elected mayor of New York. And obviously there's not necessarily a direct link here. But what do you make of this sell-off that we saw yesterday? And I wonder if you were struck by this sort of irony of those two things happening at the same time.
Yeah, I mean, the sell-off sort of preempted the results of the election, although of course it was going on as people were voting. I don't necessarily think it's related to Mamdani or that election. I do think that it's related to the fact that markets have been frothy. There are issues between the government shutdown, the massive debt, the massive treasury issuance that we have, over $38 trillion right now, and this idea that the government really isn't effectively, sort of working themselves fiscally, whether it's Republicans or Democrats, really. And I think the market was just looking for kind of an excuse to sell off. The elections kind of provide that because we did project, we did know there was going to be turnover. We didn't know the extent to which these results would be so much in favor of the Democrats, but we sort of saw the polls going into them. We knew it was kind of going to go there. I think markets just looked at that as a sort of profit-taking corrective type of opportunity.
So if we look under the hood at the US economy and what the big drivers are, IMF with its recent report out, the WEO was talking about some of the weakness that we've just been discussing around the US economy, but also some of the big growth drivers, and that is this AI story. And even though we had the market spooked around AI yesterday, Citigroup was suggesting recently that the tech giants will spend in the order of $2.8 trillion through to 2029, so higher than what was estimated previously. Based on numbers like that, should we still expect there is an enormous growth driver for the US economy and also an enormous growth driver for some stocks in the United States?
I think it's still going to be. I mean, obviously, some. You talked about Palantir in the other segment. Obviously, some stocks are going to have corrections, and there's going to be movement in terms of selectivity in the AI stocks,
which is healthy.
Which is healthy, but also there will be new technologies coming in. So the fact that these AI companies are creating data centers, and that's going to create jobs in terms of the physicality of growing them, that's going to create requirements for the metals that provide the infrastructure to be able to have the energy and the physicality of those data centers. I think those projects are going to continue. And those are longer term projects than what we're dealing with right now. And the idea of just turning to AI is going to continue, I think, to have its own momentum. So we'll see corrections. We'll see certain companies not be able to keep up or be innovative enough. But I do think that the AI sort of arena will continue to pull
let's
in
keep
money.
that board, if you would, Will. You've got 4 brilliant companies that won out of the bloodbath of 2000. No doubt about it. Apple, Amazon, Google, Meta, winners. In fact, if any of them probably thought we worried whether it was going to be a winner or not, I think Meta was the one. But they've all kind of come back in some style. Not one of those 4 brilliant companies trades at a fraction of Tesla, trades at a fraction of Palantir. So why do we think it's going to be different this time round, that valuations should be so... And these guys are proven. I talked about the Amazon net income, 21 billion or whatever it is, enormous figures as well. Why should valuations be different for the current school of amazing companies compared to this lot?
Well, there's a couple of reasons valuations, I think, are so much bigger than this lot, which is where money has gone in terms of momentum. So if you look at a Palantir with an exorbitant sort of PE, you're looking at money that's gone to the sort of the newest thing. So that doesn't necessarily, and there will be, and there is right now, a healthy correction for Palantir, and there will be for other stocks. But they're also in a period of higher momentum into the sector overall. And yes, we had that in dot-coms, and yes, we had a lot of companies fail, and we will have a lot of companies fail in this period. But the ones that have government contracts, the ones that have the connection to where the momentum is, I think those, albeit will have corrections, but I think we will see some of those continue on. And I think Palantir is actually, even with its exorbitant sort of PE, and even with corrections along the way, just happens to have that momentum in this period.
One of the most sensible, wonderful guests we've ever had. I love chatting to you as well. Palantir has got revenues this year of somewhere in the region of $4 to $5 billion. Let's say they knocked the ball out of the park, $5 billion. They've got a market cap of like 100 times that.
Yes.
Come on.
Well, but true, and this is where there will be corrections, and Palantir is one of those. But also, it can buy companies, it can leverage itself, it can go into sort of where the other growths that we don't even know about are happening in AI. So yes, there will be corrections. Yes, there will be, and yes, it's exorbitant. I mean, Tesla's been exorbitant this entire time, right? And we've had these corrections, and I actually think that Tesla will continue to see these corrections along the way. But we've also had this momentum up, and also there's nowhere else to go. So this is the other really quick thing. What I mean is,
US Treasury's giving me 4% risk-free.
Well, that's what I mean. No one wants to invest in the US Treasury market, actually, because of the overhang of debt, of the fact that foreign buyers don't want it.
That's not true. Now, come on, you know that's not true. The bid ratio on these auctions has been enormous. There's loads of people want US paper.
The percentage,
when you say no one wants US paper, they do.
Well, relative to the increase in the amount of debt, we don't have the takedown that we've had, because our debt increases is actually moving more quickly than our takedown of the debt, and that's really the problem that's going to continue to surface.
You've highlighted 2 stocks that are real favorites among retail investors, Palantir and Tesla, and we've heard for several months now from strategists on this show, really since April, that the long-only institutional investor is actually underinvested in the market, and that if we do see a pullback here driven by the retail investor, that it's going to be short-lived because those long-onlys are just sitting on the sidelines waiting to get in. Is that true in your view from a valuation perspective? If we see a pullback of this size, is this a big enough dip to be seen as an attractive entry point for these long-onlys?
This might not be enough of a dip. I think we still can see more corrections. I still can see more dip. What we're seeing now actually is more of a diversification of certain retail investors into metals, into gold, into silver, into just sort of reevaluating their portfolios. And what a lot of the institutional asset managers are going to do with that and are going to sort of move their sort of fee-based type of retail investors into are new allocations going into the new year. So I think any corrections we see now, we're going to see more of the pop-up come as reallocations of retail portfolios happen in the new year, and that's going to include some of these names. It's also going to include much more of the metals and commodities space because of the diversification that we're going to see outside of the tech space, outside of the AI space.
And Naomi, thank you for helping us debate the news flow this morning. We do appreciate your time. Naomi Prinz with us, founder Prinsights Global. Coming up on this show, Novo Nordisk trims the top end of its full-year profit forecast. We'll break down the results with Charlotte live from Copenhagen after the break. Plus, OPEC's Secretary General pushes back on talk of an oil glut, telling CNBC demand remains strong. We'll bring you Dan's exclusive interview. And the earnings continue thick and fast here in Europe today. We speak to the CEO of Vestas in about 30 minutes' time. Novo Nordisk narrowed its guidance, trimming the top end of its operating profit growth forecast by 3 percentage points to 7%. This amid lower growth expectations for the GLP-1 treatments that have made the company a household name. Let's get out to Charlotte for more from Copenhagen. Charlotte, a big day as we rake through the numbers, but also a lot of politics in the mix when it comes to President Trump, and even overnight trying to lower the price of these GLP-1 drugs to consumers. Less than $150 per month is what he's angling through his direct-to-consumer model.
Indeed, multiple challenges kind of piling up of Novo Nordisk. We know they've been the champion when it comes to obesity drugs. They had the first mover advantage, but things have become a little bit more complicated for the Danish pharma giant, and the Q3 numbers reflecting this. Their sales for Q3, 11% up, 11% at constant exchange rate. So that was kind of in line with expectations. Operating profit down 21% at constant exchange rate. They mentioned the impact of restructuring costs this quarter of 9 billion Danish kroner. They say stripping this away, operating profit will actually be up 7% at constant exchange rate this quarter. But of course, a lot of focus is on the change of management. The new CEO that just come on in early August, and in just 12 weeks, he have really hit the ground running. There's been a restructuring plan, so 9,000 jobs being cut and 8 billion kroner of savings by end of 2026. 2 acquisitions for around $7 billion. 1 bidding war for Metsera, the biotech in the US, against Pfizer. Half of the management board is going to be changed in an EGM that's coming up in next week. And of course, in the background, you were saying the price negotiations around drugs that's happening in the US, a very complicated landscape there, and how much this could impact Novo Nordisk as well, because, you know, lower prices would mean that it's available on Medicare, but how would that impact a company like Novo Nordisk? We know they had the competition of compounded drugs as well. That's one of the reasons they lowered their guidance back in July, the competition of some of these cheaper drugs that had a similar active element in it. So they're cracking down on this. So whether lower prices could allow them to kind of win back some consumers, that is a key question. But also the question of what would that mean for their drugs elsewhere outside of the US. Some analysts see that could mean a higher price outside of the US for their drugs as well. So this is all playing in the background. But of course, a lot of focus also on Metsera, that bid. They sweetened their offer for Metsera, the US biotech, against Pfizer there as well. Someone is saying, you know, are they not very confident about their pipeline if they're fighting so hard for that company as well? So all this is playing in the background. But certainly what we know is that they have lowered their guidance for the full year when they see now operating profit between 4 and 7% for this year against 10 to 16% back in July.